Hey people, thank you for stopping by Building Wealth with Rajiv. Singapore property prices are in a bit of a mess. There's a lot of nervousness around, and I reached out to Dr. Patrick Liu. Dr. Patrick Liu is a very well-known figure in Singapore. He's an investor, he's an entrepreneur, award-winning entrepreneur, and he's a teacher. Patrick and me talked about a couple of things. His outlook on Singapore property market, property prices, rentals, what are the investment opportunities in Singapore right now, how he made his money in property, and what are the learnings from that? What are the overseas investment opportunities in property, and what is his wealth formula? I hope you like the chat. Please follow my channel for such meaningful conversations. Quickly, there's a lot of noise, a lot of nervousness here. What's your view on the property market in Singapore?
It is a very, very good question. First thing to note is that the property prices have generally gone up for more than 10 quarters right now. And so the question that all of us who are property investors, we have to ask ourselves, will the property prices go up, go flat, or go down? If you can predict where the direction is, you will be able to then create your best strategies to maximize your profits. Now, I don't think the property market will crash because our fundamentals are still very strong and very healthy. But I also don't think the property prices should continue to go up because if it continue to go up, it will create a lot of social and socio-economic repercussions. And I think the authorities are also watching this market very, very carefully because they know if the property prices continue to go up, on the macro picture, we will not be competitive. On the micro picture, I think that will create a lot of hardships, especially among the newlywed first-time buyers of the property market when they realize they cannot afford to buy the property, and then they would then resort to all kinds of extreme measures, basically. So politically, it's also not very sound and healthy to have prices going up. So I believe the authority is watching the market very, very carefully. They have introduced one round of cooling measure at the end of September. I think if the prices continue to go up, I think they will introduce another round of cooling measure. I believe that the market is due for correction. Why do I say that? Because property prices generally must go up in tandem with the economy. In other words, when the economy is doing well, property prices should go up. When the economy don't do well, property prices should come down. And we all know this, our GDP at the start of the pandemic went down by 5.4%. It could have gone down by 12.4% if the government had not pumped in $100 billion to save the economy, save businesses, and save jobs. In other words, if the economy goes down by 5.4%, the property prices should also go down by 5.4%, but it didn't happen that way. And so I believe in the next 12 to 18 months, we are due for correction. In other words, if you're a property investor, this is a good time to relook at the property market. When there's a correction, there will be a lot of desperate sellers. There'll be a lot of good buys, and this is probably one of the best times to invest in the property market.
Okay. So you're saying, Patrick, that if I have money today and I've been looking to buy a condo, I should go ahead and look for a condo and buy the property.
Okay, there are many options for you, assuming you have money. So if you have money, my suggestion is hold on for a little while because the market will correct itself. When the market corrects itself, then there will be people who are desperate enough to sell you below market price. And then you can buy below market price, and rental will continue to increase because we are facing a situation where in the last few years there's so much consumption of properties, it's sucking up the supply of the property. So when supply come down and demand and prices will definitely go up at the same time. So rental will go up at the same time. So you have convergence of two very powerful forces that will be in your favor. But I'm not saying you should buy everything. I'm not saying you should buy a whole sector of property. But as investors, we're looking for that one good buy, and you will see that there will be many very good buys in the next 12 to 18 months. And by the way, even if you don't have money, that does not mean that you should avoid the property market. You should continue to monitor the market because as long as you can find opportunities, as long as you can find very good deals, there'll be a lot of people who don't have the time to look for good opportunity, good deal that will be willing to manage you. I, for one, will be very happy if somebody come to me and say they found a very good deal. I'll be very happy to finance them, fund them, or joint venture with them. And I've got 3,000 people in my community looking for very good deals all the time.
Okay, that's amazing. Now, I just want to come a little bit to the rentals, and get your view on that. You're saying that the rentals might continue to go up?
I think generally we are facing a high inflation rate situation. Interest rates are going up. I've lived through many crises. When you have such environment, fortunately and unfortunately, renters will go up. And that's the reason why generally they always say that real estate investment is a good hedge against inflation. Why? When inflation goes up, interest rate goes up, salary goes up, cost of goods go up. And to develop a property, for example, your labor cost will go up, your building material will go up, your construction cost will go up, your building works will go up. And whether you like it or not, with all these factors, it will push up the property prices in due time and rental will go up at the same time. So that's the current situation we're in. And whether we like it or not, I think rental will continue to go up, in the near future.
Okay, all right. So if I have to make a decision, a lot of my friends are trying to make a decision, Patrick, whether to buy a property or whether to continue on a rent. I think what you are saying is that it makes more sense to wait for a while and then go and buy the property or your dream home or something like
That's
that.
right. So hold back because I believe a correction is due. And by the way, for those people who are looking at renting property, this is what I do. Just to quickly share with you a principle that I have. The best property to make money may not be the property you love to stay in, and the property you love to stay in may not be the property that make the most money. So, like most people, when I came of age, instead of buying a property and staying in it, I bought what I call investment property. In other words, I believe the capital and the rental gain will go up. And I move and stay in a rented property. There's nothing illegal or unethical or immoral to stay in a rented property. What I did was I looked for an area where there are too many properties, too little buyers, too little tenants. And very good times or bad times, there will always be an area where there are a lot of empty houses. And where there are a lot of empty houses, owner knows that they have a lot of competition, they will have a tendency to rent you at way below market price. So now we have a situation where my rental property, my first rental property is a shop house. I was at one stage I was collecting $10,000, and then I stay in a newly developed landed property. At a point in time, the landlord rented to me at $1,600. Why? Because he overbuilt. He is not in the best of area. There were many empty houses around the vicinity. So I collected $10,000, paid $1,600. I got $8,400 in my pocket. Right now, I'm staying in a detached house, and in some ways, it's like a bungalow. And also, it's the same situation. There are many empty houses around my area. Meanwhile, one of my first property, we are collecting about $20,000 rental. And at the beginning, I only paid the landlord $3,000. Of course, I'm paying him a bit more now. And in between, I make about $27,000. So
Wow.
don't undermine the rental strategy, because if you arbitrage between buying a property to rent out and then renting a good property but cheap enough property, and then you can actually make money in between.
Talk a little bit about your own property building strategy, like how you built your, multi-property portfolio.
That's a good question. I don't know whether you'll be shocked to know that I actually bought my property before I even graduated with my degree in real estate. I didn't have a job, no bank accounts, and not a single dollar to my name. What I did was I focused on finding people with financial trouble. I found this property where the family were in big financial challenge, and they were trying to sell a property for $300,000. That was years and years ago, right? And I know I could do up the property and sell it for $600,000. I could make a profit of $300,000. I found a financier. I showed him the property. He was very sure the property can make him money. So I make him a very good offer. I say, you give me 10%, I put in 90%. When we make money, you take 50%, I take 50%. It's a very good deal. He gave me $30,000. At that point in time, the bank was willing to lend us up to 90%. So the bank lent me $270,000. I bought the property, do it up, sell it for $600,000. I went back to my financier. I said, you give me $30,000, now I'm giving you $150,000 back. I'm giving you 500% of profit. He was very happy. He became my friend. Today, he's still my friend. I've got 3,000 friends like this. Poor people say I have no money. Rich people say I have no time to look for deals. So what should poor people do? Poor people should go look for opportunities, and there are enough money, enough funders that are willing to come to the table to help you. As I always say, are there poor people who became rich and wealthy? Yes. Are there rich and wealthy people who started poor? Of course. How did they do it when they have no money? They did it because they don't just look at money and think of how to make money with money. They think of how to find the opportunities, and then when they can find the opportunities, they look for people to help them. So that was my first thing that I did. The second thing that I did was I look at property and I say, hey, there are many ways to massage a property that can make and to make money. So I've come to a point where I dare to say this. There is not a single property that I've seen that I do not know a way to make money from a property. Let me give you a simple example. I have a property right now where I subdivided it into A, B, C, D. And this can be used for co-working space, co-living space, data center, and many other functions. And then by collecting A, B, C, and D's rental, paying to a landlord, I earn a 5-figure rental every month. And I also put in a clause in a tenancy agreement where the landlord cannot increase my rental by a fixed amount. In other words, I put a ceiling, I put a cap on the rental. So when the actual market rental goes up, my landlord couldn't rent the rents, in tandem with the market rental, which means over time I was making more and more and more money. The first property deal that I did like this was more than 20 over years ago. I'm making like 5-figure income every month. I can just retire with one property. The fact of the matter is I didn't come out any money. I don't own a property. I just came up with a creative way to make money from somebody else's property. I can go on and on giving you hundreds of examples where everybody, as long as you have the dream, you have the action, and you're willing to learn, there are many ways to make money from property investments.
So I think that's amazing. Now, considering Singapore now, where do you see the most opportunities, Patrick? Is it commercial? Is it private? Is it landed? Or is it everywhere?
Yeah, that's a very, very good question. Let me answer this question in two different ways. First, to teach you how to fish, and then to give you a fish at the same time. So I created a property finance framework. First, you look at the master plan. Now, interestingly enough, a lot of people don't realize the Singapore government has got a master plan of what the real estate market is going to be like in the next 10 to 15 years. And you can easily download the master plan from ura.gov.sg. And the master plan itself will give you at least 6 areas that has got potential for growth, potential for profit. But that's not good enough. The second set of data you should look at is the ground data. That means the master plan may say this is a good area, but you go to the ground, it's not as good as the plan say it is. The reality is not the same as what is on the plan. And the third set of the data is the property data. Is the property market there healthy? Is there a strong demand and limited supply? So when you triangulate these three set of data, you'll find what I call the property gem that make you the most money. Let me give you an example. So I tell people that the Singapore government has already announced they're going to develop every square inch of Singapore. There won't be an area that's archaic, that's old, that is remote, that is not nice, not good looking. So I give you an example. Way back 5 years ago, I tell my students to look at areas between the junction of the Upper Thomson, Yio Chu Kang, all the way to Admiralty Park. It's a very mature, very old estate. There's a lot of old HDB flat, old army camp, old walk-up apartment, old shop houses, and so the government is going to redevelop the area. So where exactly the whole big chunk of area is the best investment? So I say it's in the area where it's called Teachers Estate. Why? Because I walk on the ground and I could identify where exactly is the MRT station. So master data say this whole area will be developed. That I know exactly where the MRT station is. And when I look at the property data, I realize it's a low density area. In other words, there are very limited supply of properties, and most of these properties are low-rise property. And Singapore government is not going to have an MRT station to support only a limited number of people. In other words, I know that over time, the demand will go up. And by triangulating these three set of data, I could spot that this is an area to make money. So now that we look at the past, let's look at future data. Some of you will know that Singapore government is not going to crowd the whole city area with industries and jobs and job possibilities. A lot of the new industries are new in the sense of they're all digitally enabled, they're all technology empowered. So things like fintech, agri-tech, meditech, even in the aviation industry. So if you look at a master plan, it'll be interesting to know that Singapore is going to set up the aviation and aeronautical hub in the eastern end of Singapore. The agri-tech is the northern end of Singapore. The cybersecurity hub is in the northeastern area of Singapore, and the meditech area will be in the western end of Singapore. So these are the growth area. Growth area meaning the government is going to pump billions of dollars to improve, to clear the land, improve the infrastructure. And the private industry will come in and spend billions of dollars to develop all the amenities and facilities. So those are the hot areas. So then you go to hot area and you zoom down to the micro segmented area. Let me give you an example. I like to look at shop houses. Why? Because nobody is going to develop more shop houses. That means the supply can only come down. And shop houses are normally erected along main road. And you will see that generally because they have got frontage, generally you get good rental. And so in some of these remote areas, you can still buy cheap shop houses. But when the time comes, when the whole area will be redeveloped to become high-tech area, then suddenly you will find that these shop houses will command very good capital gain and very good rental market. And this is how I made some of my money, because I used to invest in Little Indian Town. Now, going back many years ago, Little Indian Town was not the most highly priced area, not the most attractive area. But I tell people Little Indian Town is very close to the city. We're going to build an MRT there, and we are facing a lot of rich and wealthy Indians, both locally as well as rich and wealthy Indians that are coming down from all over the world to invest in Singapore. There's no reason why Little Indian Town will not boom. And so those days we were buying shop houses for $1 or $2 million. Today, the same shop house is selling for $6 to $8 million basically. A 600% return over a very relatively short period of time. So if you look at my property finder framework and you apply it correctly, you find you can spot very good property investment gems that would have high growth, for a very long time to come, and you can create multi-generational wealth because of them.
That's amazing. So, overseas property, Patrick, are you bullish on Singapore, or you are in favor of diversifying also?
That's a very good question. I teach my students not just to be a local entrepreneur or local investor. I teach them to become global investor. In fact, I teach them to combine the best of entrepreneurship and investment. And by putting the best of both discipline together, we create a whole new model called investpreneurship or investment models. So we tell them, look at all over the world, not just Singapore, because sometimes when the Singapore market is not very good, in another country, somewhere else, the property market is doing very, very well. So you want to invest in another country where the property cycle is going up, and then at the right time, you can refinance your property to come back to Singapore when you think the property market in Singapore is taking another new cycle altogether. So when we look at the whole world, there are a few countries that really attracts us. So we look at, of course, there are many countries that will do very, very well, but I have a model called Preston model. They must be politically stable. They must have good and sound legislation. They must have a good and robust economy. And then they must have good social cultural situation that supports the growth of property investment. And then they must be technologically enabled and be environmentally stable and balanced. And then the next thing is the real estate situation must welcome good investment. There must be good opportunity basically. So we're looking at UK and Australia. Why Australia? Because despite the crisis, Australian economy has become very, very resilient. Why? Because the number one in the world for iron ore export. And we know that everything we do has some degree of iron ore. They are very rich in minerals. In almost every house, every office, you will find some of the mineral from Australia. In fact, some of these materials are requisite for manufacturing many of the major electronic components. So I look at Australia, I think it's a good country to look at. I look at UK. Now, a lot of people say, Patrick, aren't you worried about the Brexit, the pandemic, and then the political crisis there are? And that's why I always tell them this. Actually, whenever there are problems, there are crises, unpredictability is not your enemy. Volatility is not your foe. And the more crises there are, the greater the opportunity to pick up money. Because I don't think UK is going to just sink tomorrow. I think UK will turn around and come back again. And this is where you buy property at the cheapest possible price when the things turn around, and then you do very, very well. So recently, we bought a very good property at a very, very good price. literally within 18 months, 1.5 years, we got all our money back, and we own half of a building now. We can collect rental for the rest of our life. So there are a lot of opportunities going, at least in these 2 or 3 countries.
Is just out of curiosity, Patrick, our neighbor Malaysia, it doesn't appeal to you?
I'm actually re-looking at Malaysia recently. I'm re-looking at Iskandar. The reason I say that is because Malaysia generally is a good country, has got good natural resources. Unfortunately, they had a
Political
political
issues.
scene, and but I think this will come to pass, and then they will take off again because they've got good natural resources. They've got good highly skilled workers. There are very few things that Singapore can do that Malaysia cannot do. So I look at Iskandar. Why? Because Iskandar is the biggest commercial industrial hub in the whole of Malaysia. Unfortunately, it was held back because of all the recent crises, including the political crisis. I think they're going to relook at investing in Iskandar. Iskandar is going to grow. And as Singapore grow, Singapore will need Iskandar. Iskandar is like a back office support to Singapore. And as long as Singapore is doing very, very well, many of the industries, many of the businesses will have to move to Iskandar and then create a twinning effect, a symbiotic effect between the two places. So a very good comparison is Shenzhen and Hong Kong. When Hong Kong did very well, Shenzhen did very well too. In fact, Shenzhen is even doing better than Hong Kong at this point in time in many sense of the word, in many sectors. So I look at Iskandar, but not now. But I think in about 12 to 18 months' time, there will be good properties to pick up, and when the economy improves, these property prices will go up, the rental will go up. I think there are good return on investment in the Iskandar area.
Okay. Patrick, one thing, I'm not sure whether you invest in REITs, real estate investment trusts. You know, REITs, is a stocks like, S&S as REITs, and are you familiar with them?
There is a misnomer that real estate investment is similar to real estate investment. Yes, they revolve around real estate, but two different instrument of investment altogether. And I think the basic principle is this: if you know to invest on your own, invest your own money. Don't pass your money to somebody else like a real estate investment trust to invest for you. I've been saying this for years and years and years. Especially during a time when real estate investment trust was doing very, very well. But I think we all know recently many of the real estate investment trusts are not doing very, very well. And one of the reasons why they give me a lot of concern about real estate investment trust is the corporate governance of the real estate investment trust. Very often they are started by property developer or investment consortium. They spin off a real estate investment trust, but they are still indirectly managing the real estate investment trust. The salary of the CEO is still commanded by the majority shareholder, the developer itself. So there's a bit of how do I put it in a nice way? There's a bit of a conflict of interest, even though it's not technically a conflict of interest that gave me a bit of a concern. So I will be very concerned about investing in real estate investment trust. If the real estate investment trust is in a retail space, I think this is not really the name of the game at this point in time. If the real estate investment trust is a data center, for example, depending on the location, the area, and because we are now moving into a fourth industrial revolution where everything is digitalized, then data center will do very, very well. Then it's good to look at some of these real estate investment trusts that are investing their money in some of this high growth area. Then I think there'll be very, very good return. So long and short of it is this: not every real estate investment trust are good investment. I would like to study, just like the stock market, I would like to study where they're investing. I like to study the management. I like to study the corporate governance and see whether the stocks, are value stocks. In other words, they have potential to generate enough profit to push up the prices of the stock itself.
Okay. I think last question, Patrick, and this is more from your huge success all over. What is the formula for wealth?
That's a very, very good question. I have created a formula when I was very, very young. I borrowed from Albert Einstein's law of relativity. He calls it E equals to MC squared. my law of wealth creation is called E equals to MC to the power 4. E is for excellence. That means whatever business you're in, whichever instrument you're investing in, pursue excellence. Excellence is not perfection. We all cannot be perfect. We don't want to overstress ourselves to be perfect. But excellence means you want to be able to do the best, maximize the potential, maximize the possibility, maximize the opportunity in whatever you're doing. M is for mission. I think not many people understand what their personal mission is. What are they trying to achieve? Why are they achieving? Why do they want to achieve what they want to achieve? Because if you don't know the why, you never find out how, right? It is your purpose that will always drive your performance. And then I coined the synergy of the 4 C's. The first C is your character. To me, nothing is more important than having sound character. If you have a sound character, you will be able to attract a lot of friends. You will be able to attract a lot of people that want to do business with you, join venture with you, or even finance you. So character development to me is very important, whether to be an entrepreneur and investor. And the second C really is the competence. So whatever industry you're in, whatever instrument investment, you must develop what I call the KASH, the right knowledge, attitude, skills, and habits to be successful. And the third C is really, the care and concern. People don't know what you know. They want to know how much you care for them, as the saying goes. So if you don't have care and concern for your own team, for your own stakeholders, for the people you're dealing business with, then you will never go very, very far in your life, basically. So to me, it's very, very important, because if people know that you are on the path of win-win relationship, then you can go very, very far in your life. And to me, win-win is not just I win and I win again, or I win more, you win less, or I win first, you win next. To me, win-win means you must win before I can ever win. And if you don't win, I shouldn't win at all. If I want to be successful, I must help everybody around me to be successful. If they're not successful, I shouldn't be successful at all. And to me, at this point in my life, I don't even live for a win-win relationship. I live for a win relationship. As long as you win, it doesn't matter whether I win or not. And to me, that's the most important thing, basically. Okay. And to me, the last C is all about being a human. It's about compassion. Do you really have love for the people and the environment around you? Are people better off after knowing you than before knowing you? And do you have compassion, for the community, for the country, and for the world at large, basically? And to me, this is very important. As entrepreneurs and investors, we cannot just focus on the financial bottom line. We must focus not just on the financial bottom line, but also the social bottom line, the environmental bottom line, as well as the spiritual bottom line. I think if you are able to develop this 4C, you would be able, for lack of a better word, a very strong branding. And to me, a good image, a good reputation, is a basic foundation to be able to become rich and wealthy. So I hope that all of you will take, to remember my formula of E equals to MC4. And I hope this will guide you on your journey to creating wealth.
One thing, where is L? Luck. Where is L? Luck.
Mine is called E equals to MC to the power 4. So E is excellence.
I know, but luck, destiny, where is that?
Okay, luck
that's not in the formula.
Luck to me is the result. Luck is proportional to what I call hard work and smart work. I think if you work hard, you work smart, you attract luck. So luck is not a direct result of something that happened to external from an external force. Luck is basically a result of what you do. So if you work hard, you work smart. I call it smart sweat. The smarter you sweat, that means you sweat for the right thing, you sweat for the in the right way, then you become luckier and luckier. And to me, I've been very, very lucky. And when I look back, I think I'm lucky because I have spent enough time to reflect. I've spent enough time to reimagine the future. I spent enough time to redesign myself. I spent enough time to re-engineer my model strategies, processes, and procedure. and I refresh and reinvigorate myself again and again. And when I do all this, I become a lot luckier than before.
Wow, that's amazing. Thank you, Patrick. I really appreciate your time, and awesome. I mean, I'm totally energized and motivated after hearing you. So thank you so much.
Thank
And
you
I'm
very
sure
much.
the listeners will have the same thing.
Sure. Have a nice day.
Yeah, have a nice day.